Hello and welcome to the Global Dialogue. I'm Shereen Bhan. Over the last few days, AI and its disruptive potential have spooked investors in the IT industry, but there are clear beneficiaries of this AI surge. German industrial giant Siemens is one of them. The company has raised its earnings guidance and beaten market expectations for the first quarter, driven by a surge in demand linked to artificial intelligence. Its digital industries division recorded strong profits powered by its automation and software businesses. Revenues and orders rose across all regions. The smart infrastructure division continued to see broad volume growth. Now, Siemens is betting big on AI, aiming to grow its factory automation business and tap rising demand for electrification products from data centers. The company calls it a mission to automate everything. But why this aggressive push? Let's understand the company's vision from its CEO Roland Busch, whose career at Siemens spans over 3 decades now. Roland Busch, many thanks for joining us here on the Global Dialogue. Appreciate your time. You're no stranger to the move towards AI. You've been pivoting Siemens to a greater AI-led future for a good part of the previous decade, Roland. So let me understand where things currently stand. We've seen headlines talking about a white-collar catastrophe, about how jobs are going to be disrupted. What does it mean as far as smart factories go? Are we talking about completely robot-driven factories? No human factories? What is the future looking like, and how soon do we get there?
So, this will not be that dramatic. I mean, obviously. So you will see still manufacturing sites with labor on the shop floor, but we will see that also technology is evolving. The level of automation and digitalization is increasing. There's a massive amount of money going into robots. And they will make a change as we go forward. So, in short, I would say it's not that labor is disappearing from the shop floor. It's evolving into a different way of labor which you need on the shop floor. You need more people programming robots, dealing with technology, automation technology, and the like. And there's pluses and minuses into it. Think about the United States, Germany as well. If you have countries and economies where you have real labor shortage, let alone a labor shortage on trained labor, then you obviously want to go as digital and as automated as possible in order to really run your plans less dependent on labor. It's a little bit different in India. I guess you still have many people which are pushing in the market, which you, by the way, have to train as well, because they have to have a certain level of knowledge to do that. AI is supporting that, is accelerating the way how we automate, how we design products, how we design plans. We create digital twins of a product, of a plant, and then we build it. And then you can come to a completely different level of automation and digitalization. Also in the shop floor, you have agents which are doing the job. They are working like supervisors, which can fix problems. You still need people on the shop floor. If you have to exchange a gearbox or whatever, you have to do something. But it will change as we go forward. So there's a level of disruption, a certain level of disruption in it, but it's not a world where you can shut down the lights on each of your manufacturing sites.
Okay, no lights out just yet, at least as far as humans on the shop floor are concerned. But, Roland, you said it's not going to be as dramatic as it's being made to sound at this point in time. I want you to comment. We just heard Elon Musk talk about the fact that surgeons are going to be replaced in 3 years. Now, when you hear headlines like that, people are wondering, like, what do we do? What do we train for? What is the workforce even going to look like? From your vantage point, you operate in different jurisdictions across different sectors. I mean, lay out for us, what kind of a world are you preparing Siemens for?
Yeah. So to give you an idea, we invested over the last 20 years, 30 billion in our software stack, in our software portfolio. And here we talk about our software is really software which creates physics-based digital twins of products, of manufacturing sites, of any kind of infrastructure. So, the first question is, would AI replace all that? And the answer is no, because this software, again, physics-based, gives you always a boundary what's possible and what not. Hallucination is not an option in your design. It's not an option in manufacturing. So therefore, once you contain any kind of AI technology within the limits, which are really super important to have, to rely on the decisions you make, That's a super good combination. Yes, you can still accelerate your simulation by 10, 100-fold, 1,000-fold, and make it accessible to many, many more people using AI, but you still need this combination. So therefore, this is one area which I think is super important. Now let's talk about robotics and autonomous robots, which do everything. It will take a long time until you finally rely on a robot making surgery rather than having a human. I don't know what your choice would be, but there's definitely a way to go to do that. I see two ways. One is that everybody talks about humanoids. The other one talk about robots on a shop floor. They look completely different. Why would a robot on a shop floor have legs? This is complicated. It costs energy. You don't need it. If it goes to in a social area, we have to have service robots doing different things. You might have it because the whole world is made for human-like people or even robots. And again, the level of autonomy, if you really are serious about it, if you try any humanoids on a shop floor and let them work, it's not on that level yet. Technology will evolve. You will see a stronger and stronger way of AI impacting any kind of automation, traditional automation or robots. But at the same time, and this is what people very often underestimate, the level of quality, predictability, reliability on a shop floor when you manufacture something is so high that you really have to see how technology is evolving over time to bring it into a productive way in that space.
You know, Roland, I want to go back to the point that you made about the 30 billion investment in developing software, and that's large part of what Siemens does. And I want you to respond to what we're now seeing happen across the world. Tech stocks are selling off, and people are calling it the SaaSpocalypse. It's the end of SaaS as we know it. Do you believe that that's overdone, overblown?
Yes, it's overdone. You have to, I mean, it's a complicated matter, but let me give you a very simple view on it. There's one level which I believe is very much on the spot or even already has a huge impact in terms of being disrupted. And these are technologies like, if you talk about call centers, if you talk about, I mean, really developing software code and giving the next code line by AI. I mean, this is where you see already a huge pressure and also layoffs of people, people replaced. This is where AI hits in, or already hit in. So that's one thing, and impacts some business models, as you know. Second level is any kind of software which does repetitive things. So data in and repetitive, predictable things out. Call it workflow or multi-workflow software. Part of that is ERP systems and the like. Because they do the same. They do things according to certain regulations and processes. That's something which AI can do, assuming that you get your data straight. The very important point, you have to have your data really tagged and contextualized in the right way. Then AI can do quite a bit. And that's momentarily maybe the biggest thing what happens on the market. People are thinking that AI can do that. Here I would say, yes, that's a topic. You can do that with agents, orchestrator agents, and many of those. Can you do that right away for companies like Siemens? I mean, we have 320,000 people. We have 150 manufacturing sites. Our ERP system, I cannot just say throw AI on it. We have to really be very, very careful because while we deliver something like 80 billion of revenue, we have to make sure that this works. Can a smaller company go faster on that one? Maybe, but you see that impact. The third level, which I believe, and this is what I talked about, is not impacted, but accelerated more and made it more accessible to others. So I see rather an upside, is really the software, which is vertical specific, which is integrating, which is bringing the physics behind it. That's something where these models, and these are SaaS models too, they keep on going because they do something really different. And they are working on in an industrial world where reliability, precision, and predictability is super important. So here I would say this is more an enabler or an accelerator to really spread that software to many, many more people rather than a disruption.
Okay, that's a contextual response that you've given us in the context of a company that is 177 years old and dealing with that legacy as well as its future. But Roland, I want to understand from you what the economic climate looks like and what that means as far as your business is concerned. Good quarter, you've raised your guidance, order book is looking strong at 117 billion for 2025. With all the talk of tariffs, with FTAs, some done, some in the mix of being done, including, of course, the India-EU FTA. What's the outlook and what does that mean as far as business goes?
So, I mean, we had a good growth. Order grew by 10%, revenue by 8%, and the growth came from all our businesses in all regions. And by the way, India was contributing with 15% of revenue increase. So therefore, very strong pull here from India. But we see in other areas too. Particular growth areas were data centers all around the world, in particular in the United States. We see growth from software. Coming back to what I said before, our software business is growing nicely. Is it simulation software, PLM software, EDA software? And we saw a pickup, and this was very, very important for us in automation. Slow, but it's coming. Tariffs don't impact us so much because we are very much local for local. We are a global company, but we really have local manufacturing sites. We purchase locally. So the level of local content in the United States or in China is on a 85, 80, 70% level. So therefore, this is less of an issue. We have it in our views. We don't see constraints now from supplies of any kind of electronics at this point in time. So the hope is that automotive market is coming back, and along with that, supply and machine builders, which is still holding a little bit back. And then we see growth areas like, pharmaceuticals is growing. We see aerospace and defense is growing. We see a certain growth also in the food and beverage kind of area. So therefore, automotive still a little bit slow, but overall somehow picking up. Let's hope that we don't have other new tariff discussions coming up and trading restrictions that would not help. But other than that, we have a good start in Q1.
Well, a good start in Q1. Let me double down on India. You talked about the kind of growth that you've seen in India. Data centers, of course, globally for you, boosting business. And that's a big push, government push here in India as well. What will be the levers for future growth in India for you, Roland? And M&A in 2026, is that going to be a big part of the strategy?
Let me start with India. India does a very good job in building a substantial better infrastructure. Is it energy infrastructure? Is it logistics, mobility infrastructure? I mean, India was electrifying 30,000 kilometers in the last 5 years, and there's 10 more to go. And then the whole country is electrified. We are delivering 1,200 locomotives, electric locomotives into the stock. So this brings the logistics costs down, which are quite high in percentage of GDP. You bring that down, which is super important to add then more and more industrial manufacturing, also more complex products. That's the way how I see India going. And you need obviously a good power supply and a reliable power supply as well. India is working on that as well. So therefore, my view would be that it's not only data centers, which you need as well, but that you also get more and more manufacturing, which you currently, and when you purchase parts from the outside, you can do that in India in a very competitive way. And one more thing is, India will demand also some local touch products. So localization, not only of manufacturing, but also the ecosystem of supply and local designs to meet the local demand is super relevant. That's what we do, by the way. That's our strategy. For your second question on M&A, it's always a part. So we're looking into the market. We have the firepower to do acquisitions. We are not going for huge ones. We go more for bolt-on acquisitions, but we did quite well in the last years. And the areas are, as you can imagine, it's software, but any kind of connected hardware which creates data, because that would feed into our strategy. Combining the real and digital world means that you really need data from the shop floor connected with software and create digital twins, which finally improve your operations.
Roland Busch, we would have loved to continue this conversation. Unfortunately, we're out of time, but we look forward to seeing you here with us in India and take this conversation forward. But for today, many thanks for joining us and appreciate you being here with us on the Global Dialogue. We're going to take a short break here on the Global Dialogue, but don't go anywhere. When we return, Raj Shah of the Rockefeller Foundation joins us right after this.